It's time for some trending tickers. First up, we've got BP. Shares are off just around 4.5% this morning. Now, the oil and gas producer expecting weak margins in its refining business, and they're saying that is going to dent their second quarter profit by up to $700 million. When you take a look at this release, some of the expectations, how they have shifted. They also mentioned that they're expecting a $1 to $2 billion write-down of a plant in Germany. The results from oil and trading are expected to be weak. So as a result here, they're also planning to scale back their refining operations in the country of Germany due to higher costs and declining demand for fuel. So this all sets up for what could be a maybe weaker than expected quarter for BP.
Yeah, exactly. And this is really pointing back to their customers and product segment as well. Customers, stronger fuel margins and convenience performance and seasonally higher volumes. So that's one of the factors impacting that segment. And then on the products, significantly lower realized refining margins as you were expecting, that $500 million to $0.7 billion impact adversely, unfortunately, and mainly relating to weaker middle distillate margins and narrower North American heavy crude oil differentials, and then a higher level of turnaround activity they're talking about as well. It was actually more interesting as well in the gas and low carbon energy segment for those who have those hats at home, who are ultimately tracking what they're expecting this adverse ultimate impact of about $0.1 billion, including declines in non-Henry Hub natural gas marker prices here. So all of this anticipated here impacting shares of BP, and it kind of signals and is in alignment, as you were mentioning, with what we had heard from Exxon coming into this.
Yeah, we're also seeing some analysts lower their expectations on the heels of this update. You've got Citi saying that they're now lowering their Q2 earnings or EPS estimate by 9%. Jefferies also adjusting their expectations. They now think that it's going to result in a 20% earnings downgrade there. So some figures to keep in mind ahead of this report.
Absolutely. The full report's going to be published on July 30th. So we'll be staying tuned for the rest of the financials in tandem with this.